Credit Suisse and UBS's merger has two important consequences. One, for the financial system as a whole, it has stabilized it because a slightly wobbly G-SIFI bank is no longer there. It's absorbed into UBS in a very solid transaction. The second is, as UBS develops its business model, it will be for Barclays both an important client for our markets business and a competitor for us in investment banking. But that's the way all large banks are with each other these days.
Venkat, how do you keep score? I mean, one way we look at it is price to book. And your price to book right now is somewhere around 0.44. You're lagging behind most of your competitors. Do you pay attention to price to book? And if so, how do you get that price to book back up?
So I pay a lot of attention to price to book. It's probably the single most important metric for a bank. And a bank's price to book is dependent on one of two things: improving the quality of your assets or improving your profitability. We have excellent assets. So it's our profitability and the scaling of our profitability that we are focused on. So within the UK consumer business and the investment bank, as I said, we are at scale and we look to continue to perform well. And then the other three businesses are areas where we would like to grow our scale. Our investment bank is about 60% of the bank. In a way, it's been very successful. And what we would like to do is, while keeping its momentum, growing the rest of the bank outside of the investment bank.
How much does this bank are the bankers that you have? Because you have had some exodus to Jefferies, to other places, and you've remarked about it, actually.
Yeah.
What is the issue there? Why are you losing investment bankers? Are you losing the ones you want to lose?
So first of all, we're losing a few investment bankers, but not that much more than what is normal annual turnover. I mean, this is the period in the first few months of the second quarter when people have been paid their bonuses and there's a little bit of musical chairs, as you know. Mm-hmm. It's a time-honored tradition in this industry. We made a management change in our investment bank. We spent a lot of time last year thinking about what we expected the banking landscape to be over the next decade. So what you've seen is rising interest rates, changing business models, the importance of sectors that are fairly new to the economy, not just technology, but sustainability, mobility, climate tech. And then there is just the different players and the importance of the players in the banking market. The private equity groups have been very large. Private credit funds are becoming bigger. They're slightly disintermediating what banks are doing. And as we began with a very American investment bank here in the US, based from the Lehman acquisition of Barclays, and we've grown in Europe, we wanted to put more emphasis in Europe as well. So you bring it all together, and you're talking about us thinking about the next generation of leadership of the investment bank. Building on our strengths in debt capital markets, but growing in equities, growing in M&A, growing in Europe. And when you do that kind of organizational change, sometimes it has impacts.
Well, you suggested something I was curious about. Is there a strategic shift in emphasis in the investment bank a little bit away from the United States and toward Europe? Because as I recall, your two co-heads before were based in the United States. The two co-heads now are going to be based in Europe.
One is in Europe and one is here in the US. So it's not a shift so much as an expansion. It is to try to give more attention to Europe, relatively speaking. The US remains critically important to us. And the US businesses are some things, especially in the debt capital markets, where we are absolutely leading, and we want to maintain that position.
Absolutely leading in debt capital markets. What about equity? Are you shifting toward equity?
We are trying to expand and grow our business in both equities and advisory.
When you look at US expansion, where would you be expanding if you're expanding in the United States?
I would love to grow our credit card business even more. Mm-hmm. And then our investment banking and trading businesses. As I said, we are the largest non-US bank. But there's always room to increase our market share and our reach.
There's been a little bit of the shaking up, if I can put it that way, of the U.S. banking system with some of the regional banks, starting with Silicon Valley Bank. What do you make of that situation more broadly? Do you expect more bank failures in the United States?
I'm not sure I expect failures. What I expect is concerns and banks cleaning up their act, if you like. So banks which have asset liability problems will go get ahead of it. They will try to sell assets. I think the net effect of it will be a curtailment or diminishment of lending, especially in Middle America, where the regional banks have a footprint.
Are you tightening your credit standards right now?
So the big banks, I think, all tightened our wholesale credit standards through the leveraged finance business last year. And there were many large loans, some didn't get placed. And so the wholesale banks, with rising rates, tightened their credit standards. The retail standards, we have tightened it, but they are marginally tighter than they were, say, during COVID. I think what you're going to see in the regional banks is a tightening of credit standards in areas like commercial real estate, small business lending, the things that they do.
So you said the magic words, commercial real estate.
Yeah.
How exposed is Barclays to commercial real estate, first of all?
Not very much. We do some direct lending in the UK, but it's small. And in the US, we mostly finance vehicles or portfolios of commercial real estate assets. But we have adequate protection in terms of first loss protections and loan to values.
There are some fairly substantial assets that probably have not been marked to market yet, particularly in the commercial real estate area. What is the likely effect of that to be on the banking system in the United States, but also more broadly on the economy?
So I think two things will happen. As they get marked down, some lenders and some investors will be exposed. Hopefully, it's equity investors and people who invest in them through hedge funds or private equity vehicles. Then there will be banks who might get exposed. And then ultimately, I think, as in all real estate cycles, there will be a surplus of supply, meaning empty buildings, and then over time, that will adjust itself.
You know how to manage risk, control risk. We've seen a fair amount of risk recently coming from odd places. I mean, Jeffrey Epstein with respect to private wealth. We've seen it just with Crispin O'Day over in the UK with prime brokerage. You're pretty big in prime brokerage. We saw it before with Archegos. How do you manage for very, very large clients like that who, I'll put it, go off the rails?
Yeah. David, it's a very difficult question. It's a very important question. At the heart of our business, we are dealing with people. And assessing the people, know your client, as they say, is really important. I think, on the one hand, we like to see successful people and work with them. We also believe generally, we believe in the goodness of human character, and we believe in human redemption. On the other hand, you've got to be fairly clinical about the reputational risks some of these people pose to our businesses. So I think it's important to assess your client when you onboard them and assess them periodically and be very hard-nosed if there's bad news.
Well, what about the technology? Last question, AI. We hear a lot about generative AI. What does that hold out for Barclays as potential opportunities?
Tremendous potential in how you service your clients, how you produce documents, and how you sort of manage the business. Equally, we are a large regulated institution with very strict controls over information. So we've got to make sure we use it in the right way.